The Dow staged its biggest comeback of the year today, turning a triple-digit loss midday into an 80-point gain at session's end. Trading today was driven by a big sell-off in the dollar, but more than that, by speculation over what tomorrow's monthly jobs report may hold. Now, the jobs numbers are always key, but the data may take on added importance now because of how they could influence Federal Reserve policy and, in turn, stock prices and rates on everything from bonds to mortgages and more. The consensus is that the economy added 165,000 new jobs last month. Steve Liesman has the story.
The reason the market is so nervous about the jobs report is that Fed Chairman Ben Bernanke recently said the Fed could ease back the amount that it's pumping into the economy if job creation is strong.
If we see continued improvement and we have confidence that that is going to be sustained, then we could, in the next few meetings, we could take a step down in our pace of purchases.
The consensus on Wall Street is that payrolls grew by 169,000 in May after a similar jump in April. And the unemployment rate will remain unchanged at a high 7.5%. But any number above 200,000 or an unexpected drop in the unemployment rate could spook stock investors into thinking the Fed might act soon.
I think anything less than probably 200,000 jobs, the market actually probably responds favorably, right? Because it keeps the Fed on the table, right? Which I think is what the market's looking for. Whether we agree with that or like it or not, I think that's the reality of the situation. Now, certainly anything down around the 100 number then would be concerning of kind of a stalling effect in the economy.
That's why investors will scrutinize the jobs report for such details as whether more people have part-time jobs but really want to be working full-time. Did employers ask workers to work longer hours during the month? And how much did employees' wages go up during the month? Finally, was job growth broad-based across many industries or only in a few? The Fed insists that just easing back on stimulus still means that it's helping the economy just by less than it was. But given lofty levels of the stock market and the nervousness of bulls, they may be less inclined to listen to the Fed's reasoning and more inclined to sell first and ask questions later. For Nightly Business Report, Steve Liesman.